afternoon. It's so nice not to be up at 5 a.m. for office hours with my mentor, Blaine Bartlett. Learn.blainebartlett.com/LMM, Mindset Mastermind, my mentor. All that here with our unbelievable new friend, Craig Lewis. Welcome to Office Hours.
Thanks for having me on.
I just have to say I'm a little bit energetic, guys, because just found out that Bezos might buy my LA Chargers, and nothing better than having one of the richest men on earth owning your football team. I know you're a sports guy, so you can feel me, right?
Yeah. The same guy's on my team for quite a while now, though. So
you got it. I know.
And those Cowboys.
Yeah, you and I've been down there to the Star, and
beautiful.
What a great complex and genius that Jerry Jones is. But moreover, you're sitting in a great spot. Before COVID, I was telling people, I thought by 2027, over 50% of the employees in America will be freelancers, 1099 employees, contractors. We started seeing a trend of difficulties with gig economy type of companies, of, governments feeling the pain of not collecting all that nice juice from being employees, insurance companies feeling the pain. So they use regulation to say, no, we have to categorize our Uber drivers as this, and all the unions are involved. It's very, very complex. But I sat on the other side and saying, man, who's going to protect the 1099 worker? Because regardless of what regulations do, more and more people will be freelancing. And then boom, 2027 came in 7 months because now we sit in a contractor's world, and you have, the practical solutions to provide the payroll, all the different things that we need with your company. And you founded Gig Wage, which makes sense to me. Great name, but have been able to just close a $7.5 million round. For you, what was it at the beginning? Because you started this well before, like me, understanding the contractor issue. What was it that, as a professional basketball player, said, hey, this is a big need, I should fill it?
Yeah, just quick clarification. It's closer to 10 million.
Oh, sorry.
Yeah. No, that's all good.
Hey, what's a few million between friends?
A couple million here, a couple million there. A little more news on my...
This is a good point, because I love an entrepreneur that, number one, will say, hey, hold on, this is what I've done. But anyone that's raised money, that's no joke. To me, every $100,000 that you raise should be acknowledged, and there's a valuation, and it's nothing to joke about, because I know there's 90% of the companies out there dreaming about just being able to raise their first dollar, let alone their 10 millionth dollar. So number one, congratulations on that, and thank you for clarifying that.
Yeah, and even a little bit more clarification, across the company to date, we've raised about 13 million total. The last round was our Series A.
That was $2.5 million the first round. Is that right?
Well, that's a whole nother story. So my journey to get to this $13 million was very nickel and dime and hustled and pieced together. So there wasn't like this clean $3.3 million round prior to the 10. It was 600 here, 120 there, 300 there, $1 million here, $1 million there.
I got another quick question. One of my favorite movies, White Man Can't Jump.
Yeah.
When you said you hustled the money, was that how you did it?
Yeah, hooping. I took every VC and angel investor I could find to the basketball court.
I was told, how much money could you make if I was good at basketball? Imagine me showing up and going, I'll take that guy.
I'll take that guy. So that hustle, man. But and so hustle, definitely grinded it out to get here, and that capital is important, especially when you have a grand and a big vision. And to your point, I had it before the pandemic, right? And so I'm a long-time payroll guy. I used to work at a little small payroll company called ADP. Not a lot of people heard of it. So I've been in the payroll technology space for quite a while, and I see a lot of different trends. What happened was, though, actually in 2016, I read this article from McKinsey about the global independent workforce, aka the gig economy. And it dawned on me, no one had established themselves as the payroll company for the gig economy. It was much more B2C. How do we get things to these workers? I'm a guy, I come from modest backgrounds. And one of the things I know, if you're a low to middle income consumer, the last thing you're worried about is the next app or the next service. You just want to make money, take care of your family, put gas in the car. And so I said, well, look, these people, which now you're talking about 60, 75 million working Americans, are a part of, they're different, but they're unique, but they're a part of people's companies' workforce. They're a workforce that do a lot of the work for a lot of these companies, but the companies have no infrastructure and no technology in place to cater to these people. So we decided to build that to help the companies be more competitive with how they pay, manage, and support these types of workers.
Wow. Yeah, the brilliance of this, Craig, is that you've identified a need that it really is a pressing need. And it addresses in part, I think, some of the angst that gig workers have when they either by choice or not by choice are out on their own. And now it's kind of like, okay, I'm in a bit of free fall here. And where I'm going with this is the traditional mercantile model. The traditional business model is I come into a company and it will take care of my needs in so many different ways. Yeah, so that it kind of becomes in the background. As a solopreneur, which is what most gig economy workers are, they're solopreneurs. What am I supposed to pay attention to?
That's not the case. We talk about this. So if you're a W-2 worker, right? Most people, and people are like, a payroll company for the gig economy. And I was like, well, it's what we fundamentally believe should be, which is why we're doing this. If you work a W-2 and you get paid every 2 weeks, you take for granted the fact that on Friday, when that paycheck comes, they pull out the taxes for you. They pull out your benefit payments for you. They automatically deposit your little 10% in the savings, right? All of these things are umbrellaed under your job so that you just get to go to work and spend your money. In the gig economy, this is not the case. You've got to figure out where to get insurance. You've got to figure out how much taxes you should pay. Should you be an LLC or should you get paid as an individual under your social security number? So we've solved a lot of these problems where we empower the companies to say, look, not only can you pay people instantly and on demand so you're competitive, but now we can start to become that distribution channel to help remove some of that friction. So guess what? Now gig workers can just go to work, right? Just like a W-2 worker.
Yeah, it's interesting. I've had so many, I do a lot of coaching, and I was going to start this and say I have so many athletes that turn into entrepreneurs because it's the same characteristics of the consistent, persistent pursuit. But ADP, it's interesting for me. I find a lot of entrepreneurs start their education by working for ADP. And I think there are two reasons. One, it's so big. I think they find the efficiencies of what they can do better. But I think it's a great education on the infrastructure of business, just the basics of business. You learn it there, and then you all of a sudden say, wait a second, there's some holes in what we're doing. I remember when I left, I worked for West Publishing, a big company. We sold for $3.4 billion in 1995, and then became an entrepreneur and realized, hey, there's no check sitting on my chair every 2 weeks. And,
bingo.
And there's an education on the other side of it. When you leave a big company, I would say it seems so obvious. Why don't they just do this?
Yeah.
Because it moves at glacial speeds, and all of a sudden the check isn't on your chair after 2 weeks and things that you've taken for granted. What were some of the things when you left that you didn't realize? Obviously, you realized a need there that you had to fill, a problem that you had to solve. But were there any things that you learned when you left going, whoa, I never realized that this was so difficult, or that this was happening behind the scenes?
Well, one, I'll tell you, you're preaching my testimony. ADP was the thing that really got me passionate about business, seeing how other small businesses were running. And I was on the sales side, right? So sales and growth, 95% of Fortune 500 CEOs have their training in sales. So I had this sales and business training from ADP that was phenomenal. My answer, though, is when I left, and this is probably not what you're looking for and a bit unexpected, but the thing I noticed was people didn't have audacity. People didn't have courage to be entrepreneurs and go big. So my journey to entrepreneurship was really about building up my courage and seeing these opportunities that small business owners and entrepreneurs had in front of them, but they were comfortable in in their pursuit of, whatever success looked like. Coming from ADP, I fundamentally believed you could build 2 or 3 or 4 or 5 or 6 more ADPs in the payroll space and be completely separate from them, but nobody wanted to do it. So then I had to understand why most payroll companies are built on third-party technology. So I knew it would become important for me to own and build my own technology. But I had to have the audacity, right, to go out and say, we can do something big and something special and something completely separate. And so I always used to say, people were like, man, you should start your own company when I was still working. I was like, oh, I need more experience. And what I was really saying was I needed more courage and I needed more audacity. And once I had it, I went all in.
Yeah, mark that out. It's the thing that stops most entrepreneurs, and David, you and I talk about this a lot, is they get captured by how am I going to do this? How am I going to do this? I'm going to, if this, then that. If this, I've got to wait for this. No, you don't. You just got to jump.
I always say it's the start that stops you.
That's exactly right.
I use the analogy with entrepreneurs because I deal with so many and help so many. I said, look, it's like planning a family. If you're trying to plan when you should have kids, you'll never have them. Because it's the exact, you'll never have them. There's
I
never
can tell
right
you, my
time.
wife and I did no planning, and we got a bunch of them.
That's what happened to my fourth. I forget my son said something yesterday about being a mistake. And I go, oh man, I'm getting too public with my personal life on these videos. I got my 11-year-old knowing that he's baby oops. I think I said on an interview that he was the best mistake of my life.
He's like, come on, Dad. Jeez.
But, that audacity, though, it's interesting because you look at someone like yourself that's a professional basketball player. So, you have to be able to follow your dream, to think big, no matter how much talent you have, to be a professional athlete. And you're up, so it's not as if, you were LeBron James, but I'm sure there's a lot of people that were telling you, get a real job, you got to take care of your, the whole bit.
Listen, man, you got to face that doubt. My father-in-law, let me put this in perspective for you, though, real quick, because I'm so far removed from my sports career. People don't have a lot of context around this anymore. So I played at the University of Nevada, Reno. That's where I signed out of high school. And it was our first year in the Western Athletic Conference. And our coach was a guy named Trent Johnson. It was his second year as a head coach. He was assistant at Stanford for a while. Boom. Then he took them to the Sweet 16, went on to be the first African-American head coach at Stanford. We're a big, I transferred. I played at Morehead State, played for a guy named Kyle Macy, one of the all-time greats in Kentucky, Indiana. So I'm a big basketball guy. I go on to marry Trent Johnson's daughter.
Oh, no.
So Trent Johnson is my father-in-law. So we're a big basketball family. So he sees guys come and go, hit the league, go overseas, all this stuff. So when I graduated from college and I'm trying to pursue my career, right, it was pretty clear to me I wasn't going to play in the NBA. But, that overseas grind is pretty serious. When I finished, which was early, I kind of had this knack for business. And I remember him saying, and this is, again, SEC Coach of the Year, Pac-10 Coach of the Year. He was like, his doubt, he never expressed his doubt in the moment, right? But he said, oh, you got it out your system now? And I remember hold on, man. It wasn't just this random thing in my system. I was really out here doing, but you have to be able, as an athlete, as an entrepreneur, you have to have that conviction, right? And this is one of the things I think people don't have a lot. They don't understand the importance of it. Not less about your education or your basketball skill set or, your physical attributes. Do you have the conviction to kind of, in the face of doubt, in the face of challenges, in the face of failure, achieve that goal? Now, to my father-in-law's point, I did get it out of my system. And I wanted to make sure people knew I could be a pro. Because that was never my ultimate goal. And so, being able to face doubt, being able to face failure and continue to wake up and still put another foot forward, that's where it's at.
Yeah, before I let you go, because we got the legend Howard Marks waiting in the green room there. But you got to hear this because I'm thinking, as you said, you get it out of the system. I'm like, man, if I was Craig's father-in-law, I'd be the opposite. I'd be like when he left ADP. First of all, I'd just like to say, I'm looking for a son-in-law like you, meaning tall, That's all I'm looking for is a tall
Yeah.
son-in-law. Let's break the chain of 5'7" in the Meltzer family. We'll be invincible. I'm telling you, it'll be great.
I believe it.
It'll be beautiful. But moreover, I would have been the opposite as your father-in-law. You get out of ADP, I'm like, oh, thank God you got that
out of your system.
Out of your system. Now you can live to your potential.
Exactly.
Which you really have. And I just think it's a brilliant business. I'm looking forward for your next raise because you make sure you send me the packet first because you have a heck of a business. I love the vision you have, and I love the fortitude to actually take the bull by the horns instead of just dreaming, utilizing the law of Goya. You got off your ass and made it happen. And to raise over $10 million is incredible. I'm sure every investor is well prepared for the success they're going to have with you in the lead. So congratulations, man. Please, where can people reach out? I know it's gigwage.com, but anywhere else they should reach out to you?
Yep. On all social channels at gigwage and gigwage.com. And then for me, it's Craig J. Lewis pretty much everywhere.
Well, it's only going to be a multiply growing business, and I'm sure ADP is jealous once again. They're going to look like Blockbuster when Craig's done with them. So perfect.
We might find some ways to collaborate.
Yeah, well, that happens as well. Congrats, though. Thanks so much for joining us.
Thanks for having me on.
Take care, buddy. Awesome. All right. Well, my team told me we had a heck of a lineup, and when you got a leadoff hitter like Craig Lewis in that business, how about Howard Marks coming on next?
Yeah, Howard is good. Are you kidding me? I saw him on the list. It's kind of like, really?
Yeah, so we're doing pretty well today.
Howard, good to have you here.
Hey, guys.
For those people that are living in a cave, Howard Marks is a co-founder and CEO of StartEngine Equity Crowdfunding. StartEngine, to me, is the leading company for startups in the crowdfunding space, which is a necessity. I think, as we learned, all the other the crowdfunding space was built for angel investing and collaborating and aggregating dollars to be behind companies that need it. Howard's history obviously is incredible. Howard, welcome to Office Hours. I want to start with, where you found, the crowdfunding as the vehicle from, the businesses that you've run in the past, mainly Activision, if you haven't heard of them, Acclaim, but to think about at a smaller level to go back and say, wow, this crowdfunding thing might actually work for startups as well. Where did that idea come from with your past?
Well, companies.
Oh, hold on one second. I think
you got bad sound on you, Howard.
Yeah, maybe the earphones. Oh shoot! Take out your earpods. I think it might help. Is that where we're at? There we go. Nothing like our live. We're still, shoot. Matt, maybe give him a call. Want to let Lauren in for a second? We'll answer a question from Lauren or swap them. No? Matt? 1 second? All right, hold on. So, Blaine, why don't we talk for a second while they fix Howard, and he'll bring him in when he's ready. I really like Craig. I think, too bad he's not on StartEngine. I think the 10 million would have been baby steps because they've raised over 250 million for startups. And I think both companies are just getting started. Gig Wage and
virgins there. I was doing a podcast interview today. And by the way, congratulations to you on Playbook. Yeah. Just hit that out of the park. #1 podcast in the country.
So in the USA, number one, I think business, and then overall, like in the top 10. Yeah. So it was a blessing. But I will tell you, these are the type of shows, the podcast. It's the amount of people that are coming up to me that are impacted. That's when I see the rankings of all the shows, and I have some news for you. So Office Hours, we've been, as you know, picked up by Bloomberg and Amazon, just like the 2-minute drill. And we have a film date. So we will be all aggregating July 12th in studio and Office Hours is going on TV. And
Hey.
Each of the different guests will have different episodes, obviously, because I have multiple Office Hours with David Meltzer, but I can't wait for the ones with Blaine Bartlett. And so people get ready. We're going to TV. We film in June, and I think the air dates are September, October this year. So, but we will continue the digital. We'll continue the digital version. So we're not going to give up on that. So
well,
anyway,
there's something that's really interesting about this. I started to mention the podcast I did today. Eric Edmitas. Eric's, Eric. He's in the Transformational Leadership Council with me and with you. We were talking about value adding and just what is how do you define value add? And he had a really interesting take on this, and I want to give him due credit on this. He said, adding value, whether it's through your service or your product, is an accelerator for the giver. It's an accelerator. So when you stop and think about that, and I kind of go back to Craig, his raise. I mean, the value that he's adding, in that gig economy space, it's not surprising he's raising the money that he's raising, because it's seen as something that is absolutely valued. And the accelerant that creates, he didn't go in it to make the money or to raise the money. He went into it to add value. To make it easier.
And your wife actually said something that resonates with me to that point. Is, we were talking about the pain, and there was a pain in the gig economy for the 1099 employee, the freelancer. And in giving, in respect to that accelerator, your wife, Cynthia Kersey, who wrote Unstoppable, the founder of, I'm the chairman. She is dumb enough to make me the chairman, but she's the founder of Unstoppable. She said, it's when your purpose is bigger than the pain. And I think that is aligned with that accelerant in activating that as well. To touch on podcasts, yesterday, I was blessed to have Sadhguru on my podcast. And he has such a great way of transcoding just mystic information. It's incredible. And he said, this is my favorite. He said, there's only two ways to live a long life. Number one, be miserable. When you're miserable, time takes forever, right? It slows down time. And he said the second way to live a long life is to be productive, because if you get a lot done, right, you give a lot, you provide service and value, you'll live a long life because of what you produce. And, I just love that. I thought, wow, that's some great wisdom. I mean, obviously he's a wise person like you, but, it threw me off my bench when he said, live a long life, be miserable. And I couldn't figure out where he was going with it until he explained it. And I'm like, oh yeah, of course. Miserable people always live a long life.
They look at the clock and they go, God, is it only 2? Oh my God. That just drags. And time is fungible. I mean, it really is. Time happens. My experience of time is a consequence of my experience of me living in that time.
I love that.
And it expands or it contracts. It's immediate or it takes for bloody ever.
Yeah. The other thing that he was interesting, I'm a big lessons person, and he said, I just don't agree with you. He said, you don't need to learn the lesson from pain. He said, I see it like skydiving. You want to live the lesson before you want to know the lesson before you jump out of the plane. He goes, the results are much better. So I
figure out how the parachute was packed as it's coming down.
Oh my gosh! If I can get him on your podcast, he is an extraordinary guest. And has a new book out as well about karma and being a yogi's guide to living your destiny with his inside of you, of course. And me, and him could talk forever. Just a joy. And it's just so fun and charismatic and brilliant. It was just a blessing as well to have.
All the business.
Yeah. We'll get there. So what else here? We're waiting for Howard to get our technology right. I guess Lauren is not ready as well. You can see the pensive look. I like being able to see the green room, because I see the pensive look
I
of
can't
Matt.
see the green room from here, so yeah, you can.
I get to see everybody working on it. All right.
I want to, there's a thing about product and service that is kind of interesting here, and this is from an entrepreneur thing. And I was, again, I was talking to Eric, and he's got this program called WildFit, and this isn't a plug for WildFit, but it's what I liked about his program, is there's pieces of it. And I did it about 5 years ago, and I don't do diets, I don't do any of that crap. But what I did it, and I was interesting to do it because I look at it now, and there's some things that have stuck to me, and I started unbundling this thing about what's attractive, where do things actually work, and it's when the product is sticky, and I mean, by sticky it means I don't mean it went out and or I went out and I stuck it. I got it because the marketing was good. It stuck with me because there was something that actually touched me. It's kind of like, okay, that stickiness has to do with value. How do I feel about me when I'm in the presence of that service or product? I feel uplifted, and it's sticky. I want to hold on to it. And Activision is one of the ways that I learned about that a long time ago.
There you go.
How's that for a natural segue?
There you go. We have the great Howard Marks back with us, and he will not sound like a robot now. So, Howard, welcome.
Thank you. Thanks for having me.
All right. Technology works. It's a pleasure to have you. Just to take a step back, StartEngine, genius, equity crowdfunding, genius, needed. But, coming from your background, I was surprised that, this is where you ventured into the startup community with crowdfunding. What led you in that direction?
Well, I'm surprised myself as well, but I'm an entrepreneur, and I had made a bunch of investments in maybe about 59 companies myself, and most of them failed. They failed because they couldn't raise any more capital, and I was not a very good investor because I invested in everybody. I didn't just pick the guys from Stanford. I mean, seriously, I was going for smart entrepreneurs from diverse backgrounds, women, men, people of color, everything. And no one said, "Hey, Howard, hey, you're an idiot. Don't invest in these people because they can't raise any more money." And that was true. That was absolutely true. And it was such a revelation for me that the system was broken. The way capital was being given to entrepreneurs was in a very tight box. It's a certain person, a certain age, certain geography, idea. Everything was very narrow. So if you had the Uber of this was a 22-year-old white male from Stanford, you're in. And I thought it was just not working. So as an entrepreneur, I decided, as an investor, this is not working. I'm going to go and find a way to fix it. And for those who may or may not know how the world of investment and securities work, it's very complex. It's so complex that at every point you're turning, you could get a barrier, or you could get in trouble with the SEC, or it's just awful. But that's the way the rules work, to protect investors. However, in 2012, a new rule came out, the Jobs Act. And so I read it in 2012 when it came out. I was reading it just as anybody would read a news article. And I said to myself, oh my God, if this comes out, if this really goes live, it's going to be a revolution. It's going to change fundamentally how people raise money. And I, as an entrepreneur, I knew that because when I did Activision, we didn't get any VC money. They wouldn't give us any money. We're a video game company. Why would they invest in they like platforms. They don't like publishing stuff. Certainly at that time. And so I knew that the VC world was a difficult one for people. And so, look, after being the co-founder of Activision, I could raise any amount of money I want from a VC, but I didn't want to do that because I didn't want to give up control. I didn't want to give a board seat. I didn't want to have them ahead of me, preferred ahead, the right to do this, right to do that, right to fire me, whatever. I'm not interested in that stuff. So what is the solution? And so it turns out I looked at the Kickstarter model very carefully, and I said, you know what? There's something very powerful there with Kickstarter. People are passionate. They're passionate about their money. Now, they may not get much. The one that really clinched the deal for me was Oculus Rift. This is a VR headset that you put on.
I'll go get mine.
Everybody got excited on Kickstarter. Yeah, exactly. 7,000 backers, $3 million raised, and everybody was like, this is going to be a revolution. Except that they put up the money, the entrepreneur got the money, unbeknown to them, went to Mark Andreessen, got 80 million, unbeknown to them, sold the company for $2 billion to Facebook, and then they got the VR headset. And I'm saying to myself, hold on a second. We live in the United States of America here. We live in the world of risk reward. What is going on? How can they not get something out of it? Give me something. Give me like, I don't know, give me $1,000 or $10,000. No, they couldn't because the rules for securities were not changed. And now they changed. So they have changed. And so the reason I'm doing this is because my mission is to help entrepreneurs achieve their dreams. I see hundreds of thousands of companies being produced every year. Most of them don't get financing. So you got the VCs, they do about 2,000 deals a year. That's it. The angels, maybe another 10 or 20,000, like you guys. And that's it. Done. And what are other people supposed to do? The banks won't lend. So it's a very difficult situation. So I want to unlock the idea. I want to democratize the idea of how to access capital. And so when you look at what's going on in Robinhood, people are gambling money all over the place. But you guess what? They want to be connected with great ideas. They want the journey too. They want the story. And you know what? Now with StartEngine, we can offer them that.
Talk a little bit about how StartEngine works, because it's a fascinating concept. You've actually, I think, broken the code on this in a lot of ways.
Yeah, it's a refuel.
Well, I knew I talk too much. Maybe I should talk less. But anyway,
no. This is why we have you here, to teach us. So if you could talk about, sorry.
It's very simple. Okay, when I started StartEngine, I said to one of my attorneys, I said, hey, guess what? I'm gonna let anyone, Joe, Main Street, anyone, take their credit card and put their credit card and buy some shares in companies. And he's like, are you kidding me? Are you out of your mind? Are you crazy? No one will ever go and put their credit card to buy shares. And by the way, even if they did that, are you crazy? The rules, the laws, the this and this and that. And guess what? This is exactly how it works. People go to StartEngine, they take a credit card, and they put $1,000 on an average, and they own shares in a company. And so I thought, wow, let's make it simple. So we're not completely there. We're almost there. We're very much a website you go to, and you can discover great ideas. And we have over 120 companies on our website, and we've raised over 300 million for companies, and it's growing extremely fast. Last year, we raised as much money raised in the last 4 years. I mean, it's crazy. This year, we'll probably raise more money than we raised since the beginning of the company. It's growing very fast. Now, it's simple, but there was one thing missing. The one thing missing was, okay, so now you have the shares, and then what? What are you supposed to do, right? You wait? How long do you want to wait? You want to wait 5 years, 7 years, 10 years? You pick a number. Not great. So we had to fix it. So we launched a trading marketplace. And it's basically NASDAQ for small companies. It's unbelievable. It took us 3 years to get the license. It's unbelievable. Why? Because for the first time ever, not only you can own the stuff, but you'll be able to have some early liquidity. And we call this stuff mini IPOs. Why mini IPOs? Because they're small little IPOs. You know, they raise $1 million, $5 million, $10 million, $20 million. It's not a lot of money. Keep in mind, I don't know if you remember, I don't even remember the days of Intel when they went public. They raised 10 million, okay? When they went public, 10 million, okay? Give me a break. Now, no one goes public without raising $1 billion. There's no market for the small guy. That's gone. It's over. And so, you know, we have people raise 10 million, 5 million, 20 million, and they want to allow their investors to trade. And that's our next portion of our company is to make it so easy to invest with a credit card and so easy to trade.
I love it.
Wow, I thought the gig wage was a great idea. Start, boy, I'm almost speechless. I'm thinking, on the side of trading, how it was difficult enough to allow people to invest with their credit card, but now on the trading aspect of it, how's the regulatory side of being able to control, a small entrepreneur from manipulating the market?
Okay, so that's a very good question because you've seen how it works in the real big national markets. There are lots of issues. So what we did is we did something really interesting. First, we don't allow market makers. These are the intermediates that buy shares, hold them, and then sell them, right? Yep. Not permitted. We don't allow margins. So you can't short the stock.
Can't short it.
And we don't allow options. No options, no puts and calls, none. And it's pure peer-to-peer. Now, how did I come up with that idea? I looked at the video game world and I said, hey, hold on a second. You buy a sword in one of the games, right? And you can trade it, right? Yeah. It's peer-to-peer. There's no market maker. There are no options. And it works. Peer-to-peer works. Now, everybody will tell you, no, Howard, you're wrong. Peer-to-peer doesn't work. You need a market maker. That's, to me, in my opinion, is completely false. It's one of those industry things they want to make you believe that they're a necessity, right? But I don't believe so. I believe that the consumer, give them credit, give them the ability to understand that if they place an order and it doesn't get executed on the second, instantly, so what? They have a day order. They have a 7-day order. So what? What's the big deal? Come on. Getting rid of all this layers of stuff, complexity, is part of the reason why markets are being manipulated constantly, And so peer-to-peer, and also our executions are instant. They're not T+2. Robinhood got in trouble because they had this 2-day window and they had a systemic risk. So they got a phone call from the clearing firm DTC saying, hey, you guys have to put up $3 billion right now. We trade instantly, like crypto, instant. There's none of that. So we've broken so many rules in terms of what people believe a marketplace should be, and we don't care. We believe this is the way it's going to work.
Well, I would say that you haven't broken the rules as much as re-established the rules that a free market, truly a free market would. I look to nature. Nature's the only truly free market system that I've ever found, and it's instantaneous. There is just this reciprocity that happens the moment a leaf falls off a tree. It starts to disintegrate and become compost. It's instant. It just happens. There's a trade-off right there, without artificial constraints. So this is really cool.
Real quick. I know we fell behind a little bit, but I have to ask this question just for the entrepreneurial side. A lot of people understand what you've done, with Activision and the claim. That must have been a wild ride, right? And all the way up to selling to Disney. But which one is more fun for you? That wild ride into Disney, or really reestablishing the way that our investment commerce works? Can you compare the two as far as how enjoyable it is in this stage of your career?
No, I can, and I have to tell you, making video games is fun. But imagine when I meet friends and they tell me about their kids playing video games. You can imagine the kind of conversations they have. It's just, why the hell did you do this? Wasting their time, And it's a great entertainment form, right? And they're not even watching TV anymore. The kids, my kids, they don't watch TV. They just play video games. And you know what? I can't blame them and say video games are awful, because I would be insulting my own career, right? So I still believe video games have value, but that's not our economy. Our economy is not a game, although some people think it is. Our economy is our freedom. The reason we live free today is because of our economy. We have an extraordinary thing, and we need to keep it that way. It's called the American dream. And my job here is simple, is to enable it. It's to continue it and not let it go away. And access to capital is part of the American dream. You need capital to build great things. And so if I can help tens of thousands of companies access capital and then in turn allow investors to diversify the investment out of mutual funds and bonds and stuff like that into a portion of their what we call the alternative assets, stocks in startups and maybe some real estate, whatever. If I can do that, I think I've added a value that I think is important to continue what we're all about. And so I'm having an extraordinary amount of fun and a blast trying to figure out all those details, those little difficult things to get to where we need to go. And where we're going to be is we're trying to, raise $10 billion in the next 7 to 8 years. 10 billion for companies. That's a significant number. It's not a huge number, but it's a start. And we can get there, then we can look at a bigger number later. But I just don't see myself doing anything else, period. I'm not interested in pursuing other ideas because I think this one is a big one.
I love it, and I think it is the big one. StartEngine.com. Howard Marks, I so appreciate you being here and teaching us many lessons, especially about the American dream. I think that resonated with me so much that, it's something that's being lost in a lot of senses, that, our children, don't have the 100% faith that they could do whatever they dream of. And I think that'll be our greatest loss without entrepreneurs like you. So thank you so much for joining us, and we look forward to doing more with you. And I'm going to StartEngine myself and starting to look up some more companies.
Yeah, I am too.
Thank you. Thanks,
Sounds
guys.
good.
Thank you. Take care.
Later.
Right on. Perfect. Wow. That's all I got to say. You get some of these guests and you're like, wow, what a great, you don't think about a business until you dig into it and you're like, wait a second, this is genius, one expression of God, but it's even more purposeful than you thought than just, raising money and making money. Yeah. When he said American dream, that really just hit me home in my heart. Anyway, I know we fell a little bit behind, but it was well worth it. Stephen Mathai-Davis is here, CEO and co-founder of Q.ai. How are you, Stephen?
I'm pretty good, David. How are you?
Hey, Stephen. Good to have you here.
Hopefully it was worth waiting for. I thought hopefully you caught our friend Howard Marks. That was pretty incredible, wasn't it?
StartEngine as well after our.
Yeah, we'll get you on there. Obviously AI is just as well growing, and in the fintech space, extremely data driven. So for me, I'd always like to start kind of as a serial entrepreneur. How did you get involved into the Q.ai in the list making space of fintech?
Yeah, that's a good question. So I spent most of my career on the buy side on Wall Street at large investment management houses and hedge funds. And I was beginning the route of starting my own hedge fund in my early 30s. And, that means more or less I was advising other hedge fund managers. And, I was running money as well. And first it started off being a LATAM focused fund that turned into a global macro with a focus on emerging markets. And we were using a lot of quantitative AI powered strategies there. And one of our LPs was, you're a smart kid, but why don't you try to bring this to the retail market? Because you've got a lot of experience in U.S. markets. That's what you were trading before you tried the hedge fund. I think you could do a lot here, and I'll back you. And he's one of our angel investors. And the rest was history. So we started off with a portal where it was, we'll create all kinds of strategy ideas for you, whether they be options trades, ETF trades, stock trades, rankings, things like that. It was called Quantumize.com. We were winning awards. I think Benzinga called us the retail alternative to the Bloomberg terminal.
Right.
But man, we had tens of thousands of people on there. But I read a survey, and roughly 70% of the folks were like, can't you just make this clickable where I just choose one of your strategies and then suddenly, it'll invest for me? I was thinking about it, like, wow, that's a really good idea. Like, nobody's really doing that. You mean weaponize hedge fund strategies for the retail market? So, and that's the language I was using. So Forbes Media led our our seed round, and that was actually language I used, which is we can weaponize this stuff and bring it to the retail market. But before we did anything, we actually we spoke to 3,000 to 4,000 people. Like seriously, we spoke to people we've been on Reddit, Facebook, and Instagram, like real millennial investors about the pain points they have. And I don't know if people realize the way the asset management business is set up. It's totally Byzantine. I know that sounds like hyperbole, but just hear me out, because I'm a kid who grew up in the business. My dad ran asset and wealth management companies. There's some big wigs who are the high net worth individuals who are angel investors, so just bear with me for a moment. It hasn't really changed since the late 80s and 90s. I'm talking about how mutual funds are made, sold, and distributed. I'm using those technical terms because ETFs were just an innovation of the mutual fund, right? Because now it was just a tradable security and then priced to NAV. They're made the same way as mutual funds, they're sold the same way, and they're distributed the same way. 3 to 4 firms control close to 80-90% of total assets. There's no product differentiation. And you want a case in point, we spoke to 3,000 to 4,000 people who complained about the product differentiation. Like, how many US large cap funds or ETFs do you need? There are 50 liquid ones. I'm a CFA, and I couldn't really tell you the difference between all of them. I could obfuscate and start singing a song and dance about tracking error and little tweaks here and there to sound smart, but they're all the same thing. I mean, how many different ways do you want to invest in the Russell 1K or the S&P 500? So we spoke to folks about that. Something else, and I'm sure both of you can relate to, tons of content telling you, go ahead and buy something. You know, Tesla's a buy. Well, that's great, but when should I be selling? What's my stop loss? Like, what's the risk management? Nobody's saying that, because that's the art form of portfolio management.
Right.
Thirdly, how do I build a diversified portfolio? So if you look at the whole space today, you know, all these millennial investors are investing is really easy to do, to buy securities. Building portfolios is difficult. The current crop of robo-advisors, that's just wealth management. That's kind of 60-40 portfolios. That's kind of Markowitz, you know, indexing into bonds and stocks. That's not building a portfolio of my favorite stocks. And if you look at what folks are doing, they're buying Apple, Google, Amazon, with Facebook, Netflix, so more or less a correlation of 0.98. So they've just bought one stock, their entire portfolio. That's not diversified. And they know that. And they're asking, you know, how do we do this? Nobody's here to help us. And then finally, the marketplace is becoming even more volatile. You know, if you looked at the way cycles used to be, they used to be much longer. If you remember, we talk about cycles and the market cycle being 3, 4, 5 years. Now we talk about market cycles being a year. And depending on who you're talking about, it's shorter than that. How do I trade invest in it? So we left it saying, wait a minute, what you're describing is portfolio management. And then coming back to what I said earlier about the industry itself, this is a Byzantine industry, but it's growing like it's like, you know, like weeds. The mutual fund industry is $21 trillion, guys. It's growing 8 to 9%. This thing is a monster. It just keeps plowing away. You read about it, you think it's a dead industry. Putting my analyst hat on, something that's $21 trillion growing almost 10% per year. That's not a dead industry. That's a monster that just won't stop. ETF industry, $5 trillion, growing literally 19-20%. 3 to 4 firms control the mutual fund industry. 3 to 4 firms control the ETF industry. So we were like, wait a minute, this is a real opportunity to bring investment strategies to the retail market, because they're already skeptical of what they have. $30 to $68 trillion is going to come to millennial investors over the next decade. The current, you know, offerings, the digital offerings, can't absorb that amount of capital.
Right.
If you, you know, put my hedge fund hat on, it's not going into financial advisory services. God willing, it's not going to go into free trading where people are just going to trade the money. And it's not going to go to financial supermarkets. It's going to go towards the mutual fund industry. And that's when we came up with the idea, wait a minute, this is the future. And AI-powered strategies that are purely quantitative, systematic, this is the way you can distribute it to folks.
You know, Stephen, we had a guest on a couple of weeks ago, Richard Steele. And remember Richard? And he was talking about wealth transfer. I think, don't quote me on this number, but about $25 trillion transferring from boomer to millennials in the next 5 years or so. And what they're missing is an investment strategy, particularly around the portfolio structure that you're speaking to. And so, you know, with what you're doing with Q.ai, how How do you become part of the solution to that potentially enormous problem?
Yeah. So what we've tried to do is create a product that's organic to the digital movement. So it's not taking a mutual fund strategies. I've managed mutual funds and putting a digital wrapper on it. It's creating something completely new from scratch.
Yeah.
And what we've tried to do, and what we're endeavoring to do, is bring some of the more elite strategies that you see that are AI powered. We're also factor based. Nobody really talks about that, but we do really advanced factor modeling as well. And we're bringing it within a SMA structure so that you would have your own strategy in your own account that you own. David would have his own. I would have my own. And you follow this initially. Right now, we're bringing unique strategies to trade value stocks, to trade tech. But the SMA structure, with the advancements in AI and quantitative analytics, you can start creating even more bespoke solutions. It's totally transformative what's happened because everything's gone totally digital. So what we're trying to do is be I don't know if we're the answer. We'll find out. So far, the growth metrics look great, but what we're trying to do is answer that group of people saying, I don't have time to invest. Yeah. I'm not really looking to do 60-40 stuff. Okay, I'll have my money there. I'm looking for something more dynamic. And I read every day about high net worth individuals having access to the top hedge fund managers, having access to all kinds of cool vehicles. I want to get access to this too. Oh, I can put my money into a strategy that we call new tech economy that trades weekly. That's going to be trading me in and out of Tesla, NVIDIA, Apple, indexing me into ETFs if it makes sense. And I don't have to do anything. I just check my phone, see how things are going. I'm going to give it a go. And that was our hypothesis after speaking to folks. But if you see how I'm describing it, what I'm describing is more actively, dynamically managed hedge fund or closed-ended vehicle.
Yeah, and that's what you call what netification, right? Taking a subscription-based model so that the brokers don't win. And I think that was
we're calling it the Netflixication of investing. It's we're saying, listen, you subscribe to it. It's like your Netflix account. Subscribe to it, put as much money as you want. But if you're a micro investor, if you've got $1,000 or $500, we may not be the best platform for you. And there's tons of stuff available for micro investing platforms. What if you have 10,000 or 15? There's nobody really focusing on you. That's a no man's land. Because you've got to get to 50, 60, 50, 100, 150 to get any attention from any decent financial advisor. Yeah. But listen, at 15, 20K to put that in our app for $10 a month, that's nothing. And that's what we were looking for. It's, again, we're a startup, so it's kind of a rifle shot. It's not about talking about the 40 million passive investors in America. It's about what kind of demographic is being underserved. And nobody's really focusing on them.
Yeah, I think both StartEngine and you have revolutionized or I think accommodated a huge growing class of investors that, want to understand but are too smart for the traditional investment, unlike Blaine and I that have been milked for fees and and manipulated by the best of them throughout the years. And once again, I'm just jealous of the next generation being able to have direct access and in a real economy. And I think we will benefit in the long run. So Stephen, absolutely genius. Where can people, it's TRYQ.ai. Is that where people can reach?
Try Q.ai. We're in the App Store. We just launched on Product Hunt 2 weeks ago. We were the #1 product on Product Hunt for our launch day.
All right. Congratulations.
People can check it out for free.
I'm going to catch up to my wife. I got some money to spend tonight, so I'm looking forward to visiting two sites now. So thank you so much.
That just went back to school.
Exactly. Stephen, incredible genius. I'm just blown away. So thank you so much for joining us. We'll look forward to future conversations as well, because I'm going to go check it out, come back with even more educated questions for you, but incredible ideas, changing the world. And like we said, once again, our economy is our freedom. So amazing. Thank you so much.
Thank you for having me on. Thank you.
Great conversation.
All right. real quick, we got a quick question from Doug Patton. Been waiting patiently as we had a few things. Doug is the CEO of Patton Design. I thought maybe just give us a quick minute about Patton Design and then give us your question.
Yeah, I've been attentive with the diversity of the people on your show, and I love your format. It is, I'm going to have to be tuning in. And great to discover this and participate. I'm just a simple inventor. I've had my company for about 4 decades, and in that time, we've created over 300 products. We've got hundreds of patents. We have about 5 startups that have gone into the millions, different ones in medical and consumer products. And we've got about 5 more happening behind it. It's always been pretty easy for me to think of ideas and as I've done it over the years, the process has been honed. I was hired during the Bush administration to be a science advisor for patents because I had so many. So one thing I like about inventing is that you can wherever your mind takes you, wherever your creativity wants to take you, you can start a company, right? If you know how to do it, if the idea is strong enough. And one of the things, where, there's been some wizard financial people on your show today. And I think you guys are probably financial wizards too from the questions. It's not, someone's expertise by the questions they ask. And especially wealth transfer as people get older to their kids, that's a pretty important one. But what I was on a podcast not long ago, and people were asking about invention. And there's one thing that I like to talk about for just the simple inventors like me, is that there's something I call the trilogy of invention. I like to ask you guys what you think about it. It's patents, business, and invention, right? And I have a process where I kind of travel between all 3. And people that do the patents don't really invent. They don't know whether it's a strong invention or not. So you could 95% of all patents don't mean squat. If someone has a business idea, they don't understand the technology or the patent. But they know where the market is. They know the hot spot, right? And a patent attorney knows the law about how to protect you, but they can't invent. They don't know the business strategy. So this trilogy of invention that I've been talking about lately is really important for people that are starting their first few companies. That you have to understand that you have to imagine 3 different rooms, and each person has a knowledge base. You have to constantly walk between these rooms to understand and look at it from a different perspective. Because I've started a lot of companies. You don't have a patent or any IP. All you've done is created a market for other people to take. You spend years of your life inventing something, and someone says, "Oh, that's a great idea. I think I'm going to take that." And you can't do anything with it. And a lot of people create a company they think is a great idea, but it's not the right price. It's not the right market cap. And they have to get a tremendous percentage of the product to make, or the market to make profit. So you want a big market cap with minimal exposure. And so have you guys had any conversations about how startups can go between these 3 areas? Because I see besides doing my own startups, I've worked with about 40 or so through Patton Design, and I've seen a lot of failures where people don't have all that trilogy together. Have you guys been involved or see? I mean, I'd love to talk. I've only got like a couple minutes, but I'd love to talk about that because I think it could really help people when they're creating something new. I see so many mistakes when people come to me, even big companies. Like I work with like Mercedes and Apple and all those guys, right? And they're bulldogs. They can run over people. But as we've seen in many cases, someone with a strong patent where the claim structure is written well can stand against the biggest company. If you have a claim structure that's horrible, doesn't.
Yeah. So let me cut you off because I apologize because we do only have a few minutes, and unfortunately Howard had some technological difficulties. But To answer the questions, Blaine, do you want to go first?
Go ahead.
So first, I think the enforceability of a patent is a very important issue that you haven't addressed, right? So that especially in the industries that I've worked in, a lot of times the patents aren't worth the paper they're written on because there's no profit or capitalization to enforce the patents. And I've had some of the biggest companies in the world purposefully steal IP because they know it's unenforceable. And I'll take one of the most famous people that I've worked with, Sean Merriman with Lights Out, who Nike infringed on his patent and his IP, and even though he was a well-off football player, he took it all and spent it all just to protect it. And most people don't have that type of backing to do so. So what I do think is important in that trilogy, from my experience, is that's what investors look for, right? Yeah. They want a great invention with a leader that knows business, and they want protectable IP. And I think that's the lesson for entrepreneurs, and the lesson that Doug has brought to us is this is the trilogy when you're raising money, even probably on StartEngine, that everybody asks three basic questions, right? What is it? Does it solve a problem, fill a need? Is it a good invention? 2, do we have a business leader that will evolve and adapt? And then 3, can I protect what I've built? And I think, without the trilogy, you're going to have a difficult time raising money. Blaine, real quick.
Real quick on that. I think partly it's a function of where the company is in its life cycle as well. If it's an investing startup and we're looking for investors, to David's point, the patent, how strong is it? If we're a little bit further down the road, if we got that question answered, we've got, who's the leader? Do we have somebody that has the business acumen necessary to take us from point A to point J? And then we'll talk about what happens after J. And so, I grew up on a farm. I'm pretty simple. And I remember milking a cow. I had a 3-legged stool. And if one of those legs broke, I was sitting in straw, and it wasn't clean straw. So I wanted to have those 3 legs in place. And that's essentially what you're talking about. And that's what I'd like to pay attention to on that. So board of advisors, kind of a kitchen cabinet sort of a thing that can actually give you some advice as you're kind of running down the road, I have found to be very useful. Not a formal board of advisors, but a kitchen cabinet sort of a thing. That'll poke holes in your ideas. It's comfortable enough with you that they can actually call bullshit and say, have you thought about this?
Experience is a real key when you're starting a company. But even when I work for very large companies, the process has to be like a startup. If they relax back on their laurels, that's when a company's worth starts falling apart, because there's 20 inventors right behind them. And, so that's why whenever I work for very large corporations too, I like to take that same strategy, and that trilogy of invention, can be looked at another way. It can be looked at in terms of what is the opportunity in terms of time. If an idea is too early or too late, that can kill it, right? Or if the core technology takes so long to develop. I've worked with so many companies where it's not ripe, right? That's the other thing. Like to say, well, it's in 5-10 years. I'm working on something right now. In a year, we're going to turn around. We're going to change one area of surgery, and we can get it done in a year, right? That's ripe. So there's all these little trilogies of invention for someone who's been doing this for a long time that has opportunities. And but it's great when companies are working on this 10-year plan or 5-year plan. But I think there's a lot of things for big companies and startups that are ripe for invention. A lot of people don't see that, or put too much money into something that takes them down a road where it's the wrong market, it's the wrong price. So.
Sure. We would love to continue the conversation, my friend, and hopefully we gave some insight and input that would be useful in different areas. We Love to continue the conversation. People can find you at pattondesign.com. Doug Patton, thank you so much for joining us on Office Hours.
Real quick aside, I thought if I didn't mention this, Doug, my wife loves Luminara candles.
Oh yeah, I started that with Disney.
I know you did.
Years ago, and it came from American Inventor when I won the American Inventor series, the thing that Simon Cowell started. Disney owned that channel, and so they said, Doug, hey, let's start a company together. And so I got some stories that I'd love to tell you, but time is short. I'll catch you guys later.
Thank you so much.
Good. Thanks.
All right. Yeah, it's when you run out of time, it's so hard because there was like 6 questions I wanted to ask and more things to discuss because all of the guests have been so fascinating, and we just can't control technology. Like you taught me, Blaine, we can control our mindset, our heart set, and our conscious continuum, but we can't control technology. We try. So, so we thank everybody for your patience, but it was well worth it. I promise you, these guests all the way through and through were extraordinary. Love to hear your takeaway for the day.
Very simple one. I know we're a little short on time, so I want to honor that. I don't think it's an accident that the 3 primary guests that we had today were all in the financial sector. Currency is energy. Energy is what makes everything work. And all 3 of these guests were talking about how do we free currency up? How do we free that energy up so that we can create the kind of value that our souls say is important to be created? So I just want to applaud that, and just acknowledge that the love of money is one thing, but the love of what money can do, that's where we want to keep ourselves focused, because it can do incredible things when you free that currency up.
I always say it allows you to shop, and if you shop for the right things, we can change the world, as several of our bigger entrepreneurs are doing. Mine's real simple. I think all 4 guests, they all had one thing in common. They represent the American dream. And I know a lot of people are down on America, and we're trying to unify America. And I was with the great yogi yesterday, and yoga means unification, and a yogi is a guide to that unification. Well, if you want to go back and watch this is the American dream. Craig Lewis, Howard Marks, Stephen Davis, and of course, Doug, our last guest. Everybody's living the American dream, and it's still there. And they're creating more dreams for more people by improving systems that we built this country on. And they're just antiquated. We have to rethink a lot of things, but these are the American dreamers that are rethinking our future. And I have never felt more confident with the people that we have on here that, the next generation, they will be just like my generation. They got a lot to dream for and a lot to hope for, and their generation will be better off than ours, guaranteed. So my friend, thank you for giving me and sharing your perspective and giving me your time and perspective and great lessons. Learn.blainebartlett.com/LMM, the Mindset Mastermind. If you're not in there, you're missing out. So please join Blaine. Blaine, it's always a pleasure. And I can't wait to see you on TV with me. You and me on TV.
To be on TV with you.
Yeehaw. Bloomberg and Amazon. Check out Office Hours with David Meltzer. We're going to have Blaine Bartlett, of course, as a co-host. Thank you so much, my friend.
Blessings.
Blessings. All right, everyone. Tomorrow's training is mentorship and entrepreneurship. Mentorship and coaching. It's been a heck of a day. Somehow Matt makes it here every single week. He's still here, and we are learning the lessons of life together. I enjoy everybody, but remember, most importantly, before go ahead, if you need anything, david@dmeltzer.com. You've seen it all day. It's fine. Most importantly, be kind to your future self and do good deeds. I'll see you tomorrow. Have fun. Thank you, everyone. Welcome to Office Hours. I'm Dave Meltzer, author, speaker, entrepreneur. Office Hours is a show with entrepreneurs for entrepreneurs. And we're going to dive deep into the mindset of what it takes to be an entrepreneur, how to start, how to scale, and how to exit. We're going to talk to the celebrities, the athletes, the entertainers, the billionaires, all who want to be or are entrepreneurs. And we're going to find out what it takes to have that desire that you must be what you can be, to make a lot of money, help a lot of people, and have a lot of fun. And we're going to get inside the mindset of the entrepreneur.
You want to go fast, go alone. You want to go far, go together.
We can handle hard, but it's long that bothers us. I really encourage every entrepreneur to think hard and smart, but I really give a lot of weight to an entrepreneur that works long.
I don't want to be exclusive. I don't want to create a product that's only for one person. I want it to be for everyone.
I think the beauty of a values-based approach to business is that it sets a compass in place that you can follow, whether you're dealing with a COVID, a pandemic, an economy, social unrest, or a roaring economy.
The best investment you have to make is a bet on yourself. And that's exactly what you're saying. And that's emotionally, that could be monetarily, that could be time. There's so many different, that could be giving.
The one consistent thing about them and everybody here is that just like every good house, they've got a strong foundation of core values and work ethic, right? Every last one of them spoke about the things that shaped them, and they still implement those things no matter when they jump from here to here to here, they're still doing the same things that got them to the first place.
I still remember when we bought YouTube, and it seemed like we're going to pay billions of dollars for this company that has no revenue and not even a plan to get revenue. But now it's a key part of the Alphabet strategy.
Right, a rising tide lifts all ships, and that's what's happening here. You create that elevated frequency, that elevated energy that everyone benefits from.
If you appreciate what we all are the same, it allows us to appreciate how different we are. And I say appreciate the differences. And I think that separation that exists today is something that we all need to work on, because together we'll go far. Come join me inside the greatest minds of entrepreneurship here on Office Hours.